Can an average family in Canada can actually afford a $700,000 home in 2026? Today we are going to run the exact same number that bank uses when they are approving your mortgage. In today's video, we will calculate the down payment, the monthly mortgage payment, the stress test qualification, property taxes, heating cost, debt ratio, and all the other things that is required in order for you to afford a mortgage or in order for you to get a mortgage. And then we will compare that number against actual Canadian household income to see what percentage of people can truly afford it. And because I'm based here in Waterloo region, I will also explain what this means specifically for buyers who are actually looking to get into housing market in Kitchener, Waterloo and Cambridge. And this will be for families who are trying to buy a townhouse or a starter detached home. So now first, why we are using $700,000? Because in many parts of Ontario, especially in Kitchener-Waterloo, Cambridge, this price point sits in a very interesting middle ground. It's no longer an entry level, but at the same time, it's also not an luxury. This is often includes a newer townhouse, a semi-detached, or an older detached home in many neighborhoods. For move-up buyers, this is usually the next steps after getting a condo or a starter townhouse. So the question becomes, what does it actually takes to qualify? Now, for all the homes under $500,000 in Canada, the minimum down payment is 5%. But once you cross $500,000, the rule changes. For a $700,000 home, 5% on the first $500,000 and 10% on the remaining $200,000. So the minimum down payment will be $45,000. And that's not the full cash that you need. You will also need closing cost, lawyer fees, land transfer taxes, moving expenses, and an emergency buffer. And realistically, buyers usually need somewhere around $55,000 to $70,000 that is disposable to them or available to them in order to get a $700,000 house. So if you're someone who is putting a minimum down payment, your mortgage becomes insured through CMHC or other insurer. And that insurance premium gets added directly onto your mortgage. So to give you an example, many people thinking like they are borrowing $655,000, but actually you are borrowing closer to $680,000 after the insurance is added to your mortgage. And this is where many buyers get shocked because your monthly payment is based on the insured amount, not just the purchase price. Now, here's the part that most buyers underestimate. Even if your actual mortgage rate is lower, the bank does not qualify you at that rate. They use something called a mortgage stress test, which means you need to qualify at the contract rate plus 2% or the government approved benchmark rate, whichever is higher at that time. So even if your real payment is manageable, you still need enough income to survive the stress test. Now let's estimate the monthly carrying cost for this $700,000 home. So the mortgage rate would be roughly about closer to $3,600 a month, depending on the rate. But for the purpose of this video, I will consider closer to 4% interest rate, which is pretty standard right now. Then on top of that, you need to add property taxes, heating, utilities, and insurance. So the total carrying cost would easily reach roughly about $4,500 a month or slightly even higher as well. And remember, this is before groceries, car payment, child care, and basically all the lifestyle expenses. Now, banks typically want your gross debt service ratio under 39%. That means your housing cost should not exceed 39% of your gross income. So if your monthly housing costs are roughly around $4,500, based on the income calculation, it looks like you need to have a family income of closer to $140,000 or $70,000 each in case of a couple. And that's assuming you have limited debt, a decent credit, stable employment, and enough saving. And if you're someone who have car loan, student loan, line of credit, or daycare expenses, the required income could climb even higher. Now let's compare this to reality. According to the Canadian household income data, household income of $140,000 put you significantly above the national median income, which means a larger percentage of people living in Kitchener-Waterloo, Cambridge mathematically cannot qualify for this price comfortably. And to give you an idea, the average income in KWC is closer to $112,000 before taxes. And this is exactly why so many buyers today feel frustrated, not because they are irresponsible, not because they have failed, but because the home prices grew dramatically faster than incomes. And here in the Waterloo region, this becomes even more important. A lot of families bought their condos or townhouses years ago. Now they want more bedrooms, either better school district, larger backyard, or quieter neighborhoods for their kids. But the jump from a townhouse to a detached home today can dramatically increase the monthly carrying cost, even if the purchase price difference does not seem that huge. And that's why many move-up buyers today are extending their amortization using equity from their current home or adjusting their location expectation based on this criteria. Now, most online mortgage calculators only show you the mortgage payment. They don't fully account for so many things, which is really important, like the carrying cost, basically like the stress testing, the debt ratio, property taxes, heating, condo fees, insurance, and so much more, even the consumer debt in this case. And that's why buyers often think they qualify more than they can actually get. So, can you afford a $700,000 home in Kitchener-Waterloo region in 2026? For some household, the answer is very straightforward, yes, but for many others, the math has become much harder than it was even 5 or 10 years ago. The good news is there are still strategies available, like you can go for a different neighborhood, different property type, co buying, increase your income, have a larger down payment, move up planning, and so much more. And if you're in a Kitchener, Waterloo, or Cambridge and want to understand what you specifically can afford based on your actual number, feel free to reach out to me. Happy to have a chat with you. And I can walk you through the entire process with the real monthly cost, your qualification scenarios, and what kind of options or what kind of house you can realistically get or afford. And if this video has helped you to understand the market better, subscribe for more real estate insight focused tips like this for Waterloo region. Thank you so much for watching. I will see you on the next one.